Welcome back. Time now for the Word on Wall Street. Top investors watching you. Money. Joining me now is Future Standard Chief Market Strategist Troy Gayeski. Also with me is Fund Strat Global Advisors Managing Director and Global Head of Technical Strategy, Mark Newton. Gentlemen, great to see you both. Thank you so much for being here this morning. And of course, the markets are lower, sharply lower, although off of the worst levels of the morning. The Dow Industrial is now tanking 748 points. It had been down better than 900 earlier. The S&P down 101 and the Nasdaq lower by 471 as oil prices spike. Troy, I want to get your thoughts on this. Brent touched $85 a barrel early this morning. It's the first time that happened since July of 2024. And now Barclays analyst is raising his Brent forecast to $100 a barrel, warning of supply disruptions through the Strait of Hormuz, which of course carries roughly 20% of the global oil every day. Iran repeatedly claiming that the strait is closed, vowing to attack any ship passing through. But CENTCOM reports that the strait is not closed and has sunk 11 Iranian Navy vessels so far. It still is something of a standstill. Gasoline prices are surging this morning. Qatar shut down the LNG production at the world's largest export facility following an Iranian drone attack, disrupting roughly 20% of that global supply. And the Saudis are halting operations at the largest oil refinery, Aramco, shutting its 550,000 barrel a day facility. Gas oil futures are surging while U.S. LNG exporter companies are actually rallying, like Cheniere, up 8%, and Venture Global up 16%. Your thoughts?
Yeah, so best advice we can give investors in times of uncertainty like now is not to overreact and really focus on areas of the economy or the world where you have growth at a reasonable price. And given the strong strength of the U.S. economy, should continue to power through this relatively well, like middle market private equity, where you basically have 3 to 4 times the revenue growth rate of the Russell 2000 and approximately a 40% cheaper valuation. Now, in terms of energy specifically, Maria, I think one of the other key things to remember is the U.S. economy is far less energy intensive than it was, whether you look at the 70s, the 80s, the 90s. So there's much less of a detrimental impact when you get these short-term oil price shocks. And furthermore, as you know, due to fracking, American ingenuity, we have a much more sufficient energy base, and we're actually a net exporter of energy. So when energy spikes, it's less about a net detractor to the U.S. economy. It's more about wealth being transferred, particularly from the consumer to energy producers.
Well, Mark, I want to get your take on what these charts look like, because Secretary of State Marco Rubio said that the U.S. will be rolling out an action plan today to mitigate these rising energy prices and ease the impact on American consumers. So when you look at stocks down as much as they are, Mark, and oil up as much as it is, what do these charts say to you?
Yeah, what's interesting, Maria, is that we've seen a lot of cross-asset volatility really pick up in recent weeks. I mean, it hasn't really been the stock market. It's really been the individual stocks that have shown all the volatility, and the indices have literally just started to move. And we have one of our tightest ranges in about 40 years up until the last couple of days, and now we're starting to pull back, and we look like we're going to undercut, the lows of the last month in the S&P. So, we're not yet as low as what we're seeing in Europe. Most of those indices are down about 3 to 4% today. I think it's important what Rubio said, particularly in a midterm election year. We need to get crude oil prices down. We know that the Fed officials had already started to get more hawkish, and now we've got an oil price that's nearing 80. I mean, that's certainly going to be problematic, I think, unless we get prices down sooner than later. So the administration is going to want to get this strike over, I think, as soon as possible. With regards to the S&P, I do suspect it's going to prove short-lived. Normally, during times of geopolitical tension, we do see, unusually sharp, sell-offs sometimes in the stock market. This one largely is technology and financials driven. Most of the market has actually been holding up pretty well. We know that signs of fear are rapidly on the rise. So I don't think it lasts more than a week or two max before we start to turn higher, but I do question, the degree of what the broader market is starting to gradually show volatility.
Yeah, because we've seen a bit of a rotation out of the growth names and into things like hard assets and and certainly value names. But you just mentioned financials, specifically J.P. Morgan. CEO Jamie Dimon said that the Iran conflict is unlikely to be a major inflationary hit unless the fighting becomes prolonged. He's also warning of possible higher gas prices and cyber retaliation, while expressing hope that the conflict could lead to long-term stability in the region. What about that cyber comment that he makes in terms of the potential for cyber attacks, I guess, from Iran?
Well, that's tricky. That's difficult to really quantify and how that's all going to play out. We know that, to Jamie's comment, potentially it won't be inflationary, but we need to get oil down. We can't have oil sitting at 80, moving up 6 to 7% a day and think that inflation is going to pull back. So, look, it's a tricky time, and we're seeing huge spikes in volatility across the world right now in many asset classes. I don't disagree that it's right to look to buy dips likely within a week. I do think it's going to prove short-lived, but we need to hopefully have a quick strike and see what, honestly, pull back from there, and hopefully asset prices will stabilize and turn higher.
All right, so buy dips when you can. Troy, you just mentioned the sectors and sort of the safety places to be. Amazon is expecting extended service outages after drone attacks caused damage to 3 major Middle East data centers, 2 in the UAE and the 3rd in Bahrain. Amazon Web Services still working to restore those facilities. Troy, what's your take on tech here? Amazon this morning down about 2%.
Yeah, I think one of the biggest challenges for investors this year, even prior to the recent military action in the Middle East, is how do you find diversification away from mega cap tech? And again, growth at a reasonable price and middle market private equity would be one of the places you could go. However, when you look at the 4 big hyperscalers, they have been taken to the woodshed to some extent with regard to the fact that there's concerns over the continued ability to spend as much as they are in data centers.
Yep.
That being said, the amount of capital they're spending for a reason, and that's to create even bigger moats around them. So
yes,
we're bullish medium to long term on mega cap tech. We think a great complement to it is middle market private equity. And in times like these, again, focus on the fundamentals, don't overreact, and make sure you're making prudent decisions.
Okay, we'll be watching all of that. Troy Gayeski, Mark Newton, great to see you both, gentlemen. Thank you. We're going to take a break and then talk with Iowa Senator Joni Ernst. Stay with us.